The financial views and insights from the Berkshire Hathaway AGM are brought to you by the Wealth Experts. Standard Bank, moving forward.
So we've been talking a lot about Berkshire Hathaway, the company in the United States. It's one of the top 5 in the Fortune 500. It's absolutely enormous. It's worth about $450 billion. It's an extraordinary, diversified business managed out of Omaha, Nebraska, from a single floor of an office building at number 3555 Farnham Road or Farnham Avenue in Omaha, Nebraska. The building itself is featureless. The road in which it's situated is featureless and quiet, deathly quiet. If you have a look at the video we made outside of the Berkshire Hathaway HQ, you'll see a fire engine come past. It was a Coke truck. I don't know, something red. And very little actually goes down that road other than tumbleweed occasionally. You might want to consider why Berkshire Hathaway has been so successful. And Greg Barclay is head of international personal banking at Standard Bank Wealth. And you've got to say it's smart investing, but also diversification of investing, Greg.
Yeah, good evening, Bruce. Thanks for having me here this evening. I think it definitely is around diversification. I think as the world becomes smaller, the access to information and is at our fingertips. I think for the South Africans these days, and maybe just before answering that question, Bruce, I think a lot of South Africans feel that global investing is only for the ultra net worth. You're speaking about Wati Bassan's 1.8 billion that he's going to get in the next couple of months, or his trust will get.
And your mate at Standard Bank, Krista Clerk, says Wati Bassan would be able to buy 536 shares. So 1.8 billion rand buys you only 536 shares, Class A shares, in Berkshire Hathaway, which frankly puts it out of the reach of virtually everybody except Wati Bassan.
Agreed. So even at 536 shares, you think, sure, that's not many for the amount of money, but there is a B-class share as well that's slightly cheaper that you can get into. Now,
those are trading at the moment under a little bit of pressure. They spiked up earlier this year and to about $180 a share, and they're now trading at about $164.50 or thereabouts.
That's right.
Good discounts on what you would have paid a couple of months ago.
Yeah. I think also they're probably about 13% up on the year. So again, doing quite nicely. But I think for customers diversifying, importantly, you don't necessarily just have to buy a Berkshire share. They've got other companies that they're invested in, such as Apple, Johnson & Johnson, to name a few, where our customers now are able to invest directly in those shares. As I was saying, it's not just for the ultra high net worth person. Our Standard Bank proposition does allow more South Africans to access international markets through our offshore banking, as well as our web trader platform, which is
that's a nice ad. That's a nice ad, Greg. It's a nice ad. Nice punt. Well done. When it comes though to actual putting real money into real companies, there are a couple of ways you could do it. One of the big fights that Charlie Munger and Warren Buffett had on stage, you can hear them. They bicker like grandma and granddad do. Yes. And they've been together for 52 years, for goodness sake. They're going to have disagreements. Sure. And Warren Buffett notoriously says he doesn't want his widow, when he dies, he anticipates dying before she does, to be solely invested in Berkshire Hathaway shares. 90% of his money, or her money then, should go into an index of the S&P 500. Forget buying direct holdings, forget buying shares. Nobody can do it as well as he can. Charlie Munger naturally disagrees. Sure. He says her money would be better off in the Berkshire Hathaway share. This makes the world of investing and making choices that much more complicated. Berkshire Hathaway, massively diversified, S&P 500, more diversified and cheaper to invest in. Which way do you go?
Sure. Well, I think, Chris, that's the options out there for people. And I think our customers out there have different risk appetites. They have different outcomes. And sometimes they want to invest for absolute return. Sometimes they want to invest for a goal. So I think it depending on the appetite of the customer and the sophistication of the customer. So for someone new investing in equities, sure, to take the passive route or to get into an ETF, definitely that's the way to go. Take away the worry of having to manage that share portfolio yourself, and you leave it up to the experts. But there are those customers out there that feel that they can go it on their own, and they want to get into single stock shares and start investing globally in the likes of Berkshire, Apple, Johnson & Johnson, etc.
We've seen currency strength relatively recently, and we would have been having, I would argue, the rand stronger than 12 to the dollar by by now had the president not taken that insane decision to replace the finance minister and his deputy. And now we've seen Treasury DGs and deputy DGs quitting in the aftermath of that. We would have been a lot stronger. The currency seems to be quite comfortable for now with our investment grade where it is. Are you recommending to clients to take money out of the country as fast as they possibly can?
I think obviously we certainly wouldn't go and advise clients to take out money just because of the exchange rate. I think investing offshore and diversifying your investments is around diversifying your investments, and dependent on your future goals and aspirations, it's leveraging what your future liabilities may be. So if you're looking to retire abroad or educate children outside of South Africa, certainly starting to build up a fund of foreign currency investments is certainly the way to go. But if you want to go and bet against the rand, I think investing in equities is not the way to go.
Greg Barclay, Head of International Personal Banking at Standard Bank Wealth. Thanks very much for coming in this evening. There's a great quote from Benjamin Graham, whom Benjamin Graham is the guy upon which Warren Buffett, he went to go and study at Columbia under Benjamin Graham, one of the great investors of the first half of the century. And Benjamin Graham's great quote is, the essence of investment management, in other words, the essence of managing money, is managing risk, not managing returns. Don't worry about the returns. If you manage the risk, the returns will look after themselves. The wisdom of the great Benjamin Graham, which rubbed off on Warren Buffett, and what we're hoping is some of the wisdom of Warren Buffett, or Benjamin Graham via Warren Buffett, is rubbing off on you.
Wealth. What does it really mean to you? Peace of mind in uncertain times? A home for your family? Education for your children? Or just enough for retirement? Whatever your wealth journey is, it's unique and needs a trusted partner to help navigate the course, manage risks, and turn your goals and dreams into a lasting legacy. SMS advice to 31791 today and let our financial advisors make your wealth goals a reality. Standard Bank, moving forward. An authorized financial services and registered credit provider. Standard SMS rates apply. Free and bundle SMSs do not.